Well, NASDAQ stock Ariba, pretty much a dot-com bust 10 years ago, but the tech firm has managed to rise from the ashes, slowly but steadily, becoming the world's largest global supply network, kind of Facebook for business, helping customers buy, sell, and manage their cash, products, and services online. In today's Off the Charts, let's take a look at a stock which hit a 9-year high. Really went off the charts earlier this month. It is up nearly 400% in the past 4 years. Look at that one. It's got an estimated 80% of business transactions are still done on paper. Ariba thus says there's plenty of room for it to grow. Ariba's president is Kevin Costello. He joins us now. Mr. Costello, thank you for joining us today as we delve into, Ariba was around when we were learning terms like B2B e-commerce way back in the 80s. Your big bet, and then it went way down with a lot of the other tech stocks, your big bet a couple of years ago was on the cloud. You went all in on it. Why?
Well, all in on the cloud, and I think you reflected back on the early days that the only thing that's the same from the Ariba of long ago are the name and the logo. We went all in on the cloud because we saw cloud computing certainly as a technology that could be deployed faster and cheaper for a lot of organizations, but we saw it as a way to change the way businesses operate, and that's what we've done. Over the past 3 or 4 years, we've built a new model for business commerce. We've built a network that connects buyers with new sources of supply in a much faster, more efficient, lower cost manner. And we've allowed companies to go find new business opportunities from qualified buyers that are out there in the market ready to make purchases.
I don't know if you heard Herb Greenberg earlier. What do you think? Are you a technology company or something else?
Yeah, well, I think we're a company that's really helping companies make their business better, and certainly we're using technology to be able to do it. And I think what makes us successful and grow and allows more people to come to our network. We've got over 500,000 companies on our network today, transacting over $173 billion of business on an annual basis, is the fact that they're driving real business value. They're getting more sales. They're finding goods to buy at a lower cost of sale. So it's creating business value for them.
You put buyers and sellers together. You put buyers and sellers together, clearly for a price. Let's bring in Mr. Costello, Peter Goldmacher. He's an analyst with Cowen and Company. He rates your company a buy and calls them the 800-pound gorilla in their space. So this could be a very friendly conversation. Peter, welcome. Good to have you with us. One of the things you said was that this company and its management took a smoldering ash of a company and rebuilt it. How'd they do it, and why are you so impressed with them?
Well, Ariba is a name people have known for a long time. Back in the day, everybody was the Ariba of whatever category they were competing in. So to hear Ariba be described as the Facebook of procurement is pretty interesting. I think what Ariba had back in the day was a notion of what we called then B2B e-commerce, but what we call now the Ariba Supplier Network. And the opportunity is if you can build a network and you can get enough traction on the network, enough buyers on the network, and enough suppliers on the network, and you can start to deploy an Amazon or eBay type paradigm, not to consumers but to businesses, then you have an enormous opportunity to not just take consumer spend, but global spend to the network. And when you're not constrained by your cost of distribution, you don't have to hire sales guys to do it, but you get your buyers and suppliers to talk to each other, and you create that network effect, you're really talking about an enormous opportunity. And that's what Ariba figured out very early on and continues to refine and perfect.
The stock has had a nice run. It's up almost 4.5% right now. How much is left in the stock? Do you have a price target for it? Because you have it rated as a buy.
Yeah, we don't really do price targets at Cowen, but when I look at Ariba and I look at where they are in the evolution of the opportunity, this will be a much bigger company. If you look at all of the dollar volume that goes across the Ariba Supplier Network, it is less than 2% of global trade. And there's no reason to think that that won't continue to grow. So it's still a massively underpenetrated opportunity. And Ariba is really the only one with this network. And as we see in names like Facebook and some of the other social-oriented names you guys were discussing, once you get to critical mass, you're the winner.
Kevin, do you have enough critical mass to be a barrier of entry to other competitors who might enter this market, or is the fact that still there's not that much happening online compared to what's available mean that you could face a lot more competition in the future?
We've got $173 billion going over it. We've got 525,000 companies using it. We're the largest network of its kind by far on the planet today, and I think what Peter was talking about was that's $173 billion of what some estimates are is a $12 trillion market opportunity. So even though we're the largest in the world today, we're only penetrated by 1.5%. I think we've got a good lead and a very, very open market opportunity.
My last question for you, Mr. Costello, is unless I saw somebody liken your company to Amazon for business, but you don't have big warehouses, do you, of products? That's
that's the beauty of it all.
That's
we don't
the
have a
beauty
heavy
of it,
capital
right?
investment. Right. We
You're
don't have
like
a heavy capital investment. We're connecting buyers and sellers together to allow commerce to happen more efficiently, and it's a new business model only possible by some of the new technologies that are out there today.
That's very interesting. Kevin, Peter, thank you very much. I think you guys should be friends on Facebook, by the way, already.
So.
All right, terrific. Thanks, guys.
Or LinkedIn.
Or LinkedIn.
So not long ago, I was a professional trader. But now I trade for myself, from home, with Fidelity's professional-grade tools. With Active Trader Pro, I get streaming level 2 quotes with a view into market makers' displayed book for greater market access and liquidity, and guaranteed 1-second execution on eligible trades. But more importantly, I get extra time with the family. Right, guys?
Huh? Ew, stop breathing on me.
Bring the trading floor to you with Fidelity's professional-grade tools.
All right, we have some breaking news involving the SEC. Let's go right now to Eamon Javers, who is in Washington, D.C. Eamon.
Hi, guys. Well, just a few minutes ago, the SEC announced that J.P. Morgan is going to be paying more than $150 million to settle charges that it allowed a separate entity to set prices, set assets that were going to be in a CDO, and basically misled investors as to what was in that CDO. The investors did not know that there was a hedge fund that had a short interest in the CDO. Now I'm joined by Rob Khuzami, the enforcement director of the SEC. And Rob, if you can tell me what happened here between J.P. Morgan and Magnetar, the hedge fund.
Well, our complaint alleges that J.P. Morgan permitted Magnetar to be involved in the selection of the assets for a CDO called Squared in 2007 without disclosing to investors that Magnetar was selecting those assets and had a short position so that it had an economic interest adverse to the investors.
Now, where are you with this investigation in terms of the Magnetar piece of this? Are you finished investigating Magnetar, or can we expect that there's more to come on that front?
Well, with respect to this deal, I think the charges that you see unveiled today are the charges that you're going to see. Keep in mind that with respect to these cases, it's the party that has the obligation to make the disclosure. That is the party that runs the risk of violating the securities laws if they don't do that properly. And Magnetar did not have that obligation. J.P. Morgan and the collateral manager, GSC, did.
Now, you're charging J.P. Morgan as a firm here, but we don't see any allegations here against anybody individually inside J.P. Morgan. Why is it that the firm allegedly did something wrong here, but we don't see any allegations that any of the individuals inside that firm did anything wrong?
Well, we did charge the managing director of the collateral manager, the investment advisor, Mr. Stefflin, and that's going to be a litigated case in New York. We charged him with violating his fiduciary duties and the firm's fiduciary duties to give full disclosure to the investors. With respect to charging individuals at J.P. Morgan, we look at individuals in every case. That's where we start. There are a variety of considerations and some mitigating factors, litigation risk, defenses that may be available to an individual that's not available to a firm. But I assure you, we start with looking at individuals, and I think our history in the credit crisis cases shows we've brought a large number of cases against individuals.
Thanks so much. Okay, guys, that's the latest here from the SEC and Rob Khuzami. Now back over to you.
Thank you very much for that, Eamon Javers.